Hello dear traders! Yesterday, traders were largely focused on the results of the ECB monetary policy meeting. It is quite difficult to curb soaring inflation in times of a raging pandemic. However, the regulator seems to be ready to take appropriate measures to cap its growth. The US stock market reacted immediately to the ECB's decision. Let's discuss how the meeting results influenced currency pairs in today's video review. Investors began to get rid of some assets yesterday following the ECB meeting. After the European Central Bank said it could raise the curative necessary, the S&P 500 fell by 2.44%. Shortly after, the US currency also declined versus the euro. The US dollar index, which measures the strength of the greenback against a basket of 6 main rivals, showed a moderate decline of 0.68%. However, it has been dropping for 4 days in a row. It has already lost 2%, so now it is located closer to the January lows than highs. Apart from that, the US will unveil the Nonfarm Payrolls report for January today. Its figures are sure to have a big impact on the greenback. The Department of Labor has already warned traders that the reading may be rather weak. For instance, on Wednesday, ADP data greatly disappointed investors. Private payrolls tumbled by 301,000 in January instead of the forecast reading of 185,000. Currently, the index is trading at 95.26. It's likely to stay in the range of 94.90–95.50. Japan's main stock indices closed with a weekly gain of 0.7%. At the same time, the yen managed to strengthen versus the US dollar amid a rise in cross-currency pairs. The euro versus yen pair grew by 1.69%, while the pound-yen pair advanced by 0.68%. Now the dollar-yen pair is trading at 115.03, which is still below the balance indicator line. It means that the pair was able to add gains yesterday thanks to a correction. As for monetary policy, Bank of Japan Governor Haruhiko Kuroda notes that inflationary pressures have been weaker in Japan than in the United States and Europe. This is why the regulator will retain a soft stance to boost economic revival. Apparently, the dollar-yen pair is likely to change its trajectory amid external fundamental factors, for example, the release of the US NFP data. If the figure is positive, the pair is sure to climb higher. It may even approach the resistance level of 115.40, yet the probability of a weak figure remains high. If so, the pair may nosedive below 114.38. After that, bears will take control, pushing the pair down to 113.32. The Reserve Bank of Australia earlier said that the inflation outlook remains highly uncertain. Therefore, it monitors various factors to make a decision, so it's sitting on the sidelines. Perhaps this is the reason why the Aussie did not rise following the ECB meeting. The euro gained 1.23%, while the Aussie grew by 2 pips or 0.06%. At the same time, the Australian versus the US dollar pair almost touched the target level of 0.7171. This morning, the pair was declining. Analysts believe that the Aussie may soon resume a gradual increase. It may begin after the release of NFP data. Currently, the pair is trading at 0.7117. If it decreases below 0.7095, it will reach the Fibonacci correction level of 38.2%. In case of a deeper correction, the price may drop to 0.7065, which will erase half of the gains from January 28. After the correction, the Australian dollar is likely to resume an upward movement to the target levels of 0.7190 and 0.7227. These are the main events of this week. We are sure you have been able to increase your profit this week, perhaps with the help of our video reviews. If you have any questions or want to share your opinion with us, please leave your comments down below. Have a wonderful weekend and see you back on Monday.